the Fed does not cut interest rates because they look at the economy and go, well, this looks awesome, right? There's problems that are brewing beneath the surface that they're trying to get ahead of. And historically, I don't care what recession you look at, you see headlines of soft landing.
Oh,
Everyone
yeah.
says soft landing is coming until soft landing does not come.
So the market is expecting 3 rate cuts, one in, I guess it would be September, one in November, and again, one in December. The market, frankly, has been wrong all year. We start the year at 7. We now have had 0. So we also have Jackson Hole, which I think this Friday, Jackson Hole, Mr. Powell is going to be speaking, and I think it will be market moving. I think he might surprise the market, but I've got to ask Taylor from Life Goal Investment, what does he think? All right, Taylor, this Friday, it's going to be interesting, I think.
Yeah, the market has been pricing in massive swings as to how many interest rate cuts will come, how big will the interest rate cut be in September? Will it be 50 basis points, 0.5%, 0.25%, kind of up in the air? And I think the market's looking for Jackson Hole, which they don't make a rate decision on, and the big public speech that he'll make there as depicting what'll happen in September when they actually make that rate movement. I will rewind back to the beginning of this year, and you and I were both sitting on the 6 to 7 interest rate cuts is crazy. And
Crazy.
we said, no chance is that going to happen. Why is the market pricing this? And now we come back and it's 3 interest rate cuts that the market's anticipating at this point. And I have come from the 0 to 1 camp out to the 3 interest rate cuts that the market's
Oh,
expecting. So
all right. So you're up to
I
3.
have made a big turn, right?
Okay.
And I think it's important as people in our shoes to take incoming data and
Yeah.
manipulate your thoughts based on what's incoming. So that's where I am. I'll let you kind of take it from here, and we can frame up, why potentially that thought process has changed. But I'm interested to hear your thoughts as well. What you think is coming out of Jackson Hole?
Yeah. So I think for the novice, I think what you have to go into Jackson Hole with is Powell going to be a hawk or a dove?
Yep.
Right. I think for the average person watching this, that's what you have to kind of translate. Now, if he's going to be a dove, he's going to say things like, inflation is trending lower. We're feeling good about our target. And then he'll say on the opposite side, we are concerned about
Correct.
the job market.
Correct.
Now, I don't think Powell's going to come out and say anything about it being a lock, but he's going to paint the picture that if the data goes this way, you can expect a cut. I think he'll also probably, if he's a dove, I don't think he's going to paint a vision of a 50. I think he'll see that as too much. If he's a dove, he's going to go a quarter and watch what happens. So that is absolutely possible. I actually think he's going to come out and be more hawkish once again than the market expects. I think he's tired of telling the market, you're not listening to me. You're not running the ship. I am.
Mm-hmm.
And I think he's going to say things like, we're not in a hurry. We have time. We can be patient. There is no rush. We still have a growing economy. Why would we cut rates?
Yep.
Right? Yes, the job market is up, but we're still below full employment. Right? I think so. I guess it's a hope. I hope he comes out more hawkish. I don't want him to bend the knee to the market.
I totally agree with you. And anybody that's disagreed with you backward looking has been wrong. And the fact that he's told us what he's going to do, the market hasn't believed him. He's told us
Correct.
what he's going to do, the market hasn't believed him. And the market's trying to guide him in their direction, but it hasn't worked, right? He's remained pretty darn staunch on things. I think, to your point, that he alludes to a 25 basis point cut. He said pointedly to a question in the last meeting, is 50 basis points something? And he said, it's not something we're considering as of now. And the market has not had massive negative news between then and now that would change that whatsoever. In fact, retail spending came out really hot last week.
1%.
Yeah. So it shows that, the retail consumer is still alive and well, at least to this point. I do think the reason that I've come from 0 to 1 interest rate cuts this year up to more like 3 is I do think that there's just things going on beneath the surface that are weakening on the employment side that are going to catch up. And I think that long and variable lags are going to start to come to fruition. And you may say, hey, Taylor, you're being bearish, whatever, that might be the case. The reality is unemployment has a tendency to move very, very gradually and then snap. And
Yeah,
I do
all at
not,
once.
and they
Yeah.
do not want to see a snap in unemployment.
Yeah.
And so they were late to the game to start. I think that they are quasi concerned with being late to the game on the cutting side with inflation trending the way it's trending. And granted, let me be very clear on this. Prices are not going down, right?
Yeah. It's
Inflation
not
sucks.
deflation, it's disinflation.
Inflation
Yeah.
sucks, and it does not feel like inflation is going down. It's
Mhm.
disinflation. The rate at which inflation is going up has slowed, and it does look like for the past year it's under control. And so for the past year, inflation has hovered right around 3%. And so with that, is it moving down to the 2% target? No, but on the unemployment side, you have seen a meaningful pickup in unemployment trending pretty straight line higher. Now, it's not a
Mhm.
scary trajectory like this, but they don't want that snap effect to take place. And I
Yeah.
think with that, 25 basis points will be the move. I will say history indicates that it won't be 25 basis points, that it'll be 50. The last 3 times we've gone into cutting cycles, you haven't seen 25 to start. It was 2008, I'm sorry, 2018, prior to 2008 and 2007, and it was 1999. When they cut initially, they cut by 50 basis points.
It's
And what
funny you
I
brought
think,
that up
go
because
ahead.
because I will agree with you, but I think our order is different. If you ask me how many rate cuts we have this year, I would also say 3. But I don't see it being 25, 25, 25. I think I have always felt, and I've said many times, that Powell's going to go one meeting longer than the market wants.
Okay.
So I do not think we get a cut in September. And now that's kind of some hope and hope because I've been saying it for freaking 4 months. But I do think we get 50 in November,
Yep.
right? So
Right
I think we
prior to
get
the election.
no, it's right after.
Or right at, I was going to say right after the election, rather. Yeah.
Yeah, it's right
Okay.
after. So yeah, the
Yep.
election's Tuesday. The Fed will release Wednesday.
Yep.
Um, so
And
that's what I
does
think.
that keep them out of political purgatory if they do it right after? It
Absolutely.
doesn't matter, whatever.
Yeah,
Okay.
votes are in.
This doesn't seem stupid. What seems stupid to me is them not moving in September, but it doesn't seem stupid. The logic of like, okay, they're past it. Can't make any argument on political nature. Let's get it down to where it should be.
Yeah.
Um,
We'll
I'm,
just
I'm,
do
I'm
2. We'll just do 2 in November versus 1 and 1.
two for
Right?
one.
It's
Yeah.
it's 6 weeks. Right?
Yep.
It's 6 weeks and they're going to be like, "Hey, the only way the so let's put some numbers on this cuz we have PCE coming out later this week, I think also on
Yep.
Friday.
Yep.
We will get a CPI print, a PPI print, and one more jobs number. And I
Correct.
think the jobs number is the one that will matter. And the reason I think they're going to not cut in September is I think the unemployment rate that jumped from 4.1 to 4.3 is going to go back to 4.2. I
Okay.
think we had some data in Texas because of the hurricane that goosed it to 4.3.
Okay.
So if it pops down to 4.2, I don't see how you could cut with inflation near 3% and the job market getting better, if you will.
Yep. Yeah. Because it would have ticked back down from an unemployment standpoint. Fair interpretation. Yeah. Broadly speaking, I think it's important for people to realize that, like, you look at inflation and you go 3% is not 2%. Their target's 2. So
Yep.
how could you cut during that? But I think the other realization is I did a video the other day on what neutral is, what
Yes.
neutral interest rates are, and I think you have to realize just how restrictive economic policy, monetary policy is right now. So neutral is not, there's not a specific number what neutral
Nope.
is,
Yeah.
but neutral is near-ish inflation. Inflation drives what neutral rate should be. So
Mm-hmm.
right now inflation's at 3, the federal funds rate is at 5.3. And
Mm-hmm.
so there's a pretty darn meaningful gap between those two things. And so what that means is the economy is being restricted monetarily. Now, I will give the caveat that on the fiscal standpoint from the government, it's being goosed, right? So
Oh,
we do
that
have,
exactly. That's where all the spending is. Yeah.
that's where we have a push and pull playing out here. And maybe the Fed has to deal with that, although they're apolitical. Maybe they're like, hey, we're spending like drunken sailors in Washington. Maybe we can keep rates higher for a little bit longer of a period of
Yeah.
time. But the reality is, when the Fed cuts, they typically cut between 200 and 300 basis points.
Yes.
That's what history states. And so that takes federal funds rate from 5.3 down to 3.3 to 2.3. And
Mm.
we look at this and the markets might celebrate it because in a vacuum, if interest rates are the only thing you're looking at, stocks are benefited by lower interest rates. the cost to finance new projects, hire new employees, etc., comes down with mortgage rates and all that lending rate comes down. On the whole, the Fed does not cut interest rates because they look at the economy and go, well, this looks awesome, right? There's problems that are brewing beneath the surface that they're trying to get ahead of. And historically, I don't care what recession you look at, you see headlines of soft landing.
Oh
Everyone
yeah.
says soft landing is coming until soft landing does not come. So there's no warning when soft landing becomes hard landing. And that's
Yeah.
something that I think people have to realize. When, our job is building out portfolios for people. It's getting ahead of that. It's saying, okay, where are stocks priced right now? Are there better opportunities elsewhere that might do similar returns, if not better returns, than what's being forecasted for stocks at a fraction of the risk? And that's
Yeah.
that's what people have to look at.
So if I were to kind of summarize your thoughts on this, you think Jackson Hole will lean dovish. He will tee up a likely September cut of 25, but not commit clearly. And then you think we get 2 more cuts as we wrap up the year.
Yeah, but I don't think that Jackson Hole comes off as dovish relative to what the market thinks. Right?
Yeah.
So I think he
Okay.
alludes to 25 basis points, but right now 25 basis points is the minimum that's going to happen if you ask market participants. It's 25 or 50. So I think that it comes off potentially even dovish, where he gets more point in the fact that 50 basis points is not happening.
Yeah, because I think I looked at the market before our call. It's 100% chance currently to the market there'll be a cut. I think it was 80% 25 and 20% 50, something like that. Might have been 70-30.
It was 50-50 just a couple weeks ago, 50% chance of a 50 basis point cut and 25 and 50 basis. You got it.
Yeah. Yeah, I got you. So let's kind of put this. So he does this thing Friday morning. So by Friday afternoon, if we see this the way you do it, we'll have lower 50% or 50 basis points. It'll be something in the single digits. 25 will go up. Do you think anybody will be betting on 0 cuts by the end of the week?
No, I'd imagine you are, but I don't think that 25 basis points is not going to happen.
And that is we're going to know Friday, because I do think he's going to lean even more hawkish than that. I think he's going to use language like, we're not in a rush. We can be patient. He may even say something like, we don't want to interfere in the election or something like that, which will
Listen to
tee up a
how
big,
effing crazy this is. The market gaps down 2 Mondays ago.
Yeah.
3 Mondays ago, whatever it was, 2 Mondays ago now. Gaps downward, 3, 4, 5%. Starts rallying right thereafter. And people are blowing whistles going, emergency Fed cut.
Jeremy Siegel, 75.
I'm like, what? Did something change that I missed? I was on vacation, so I was focused, but not as focused as normal. I'm like, whoa, what did I miss?
What happened?
Oh my gosh. The absurdity of the market.
Yeah, Jeremy Siegel, emergency 75 today and 75 in September.
Jeremy.
Dude, yeah, let me just tell you that the Fed doesn't care about the stock market. It doesn't promise higher stock prices.
Correct. Yeah, dual mandate. Stock market's not in it.
Yeah, let me think. Nope, not there. Do me a favor, Taylor, where can they find you?
Find us at Life Goal Investments is our username on both Instagram and on TikTok. Daily 60-second videos.
Yeah, I can't believe how much you get out in 60 seconds. It is truly awesome. Thanks, buddy.
You're the man. Thanks.